Starbucks stock, ticker symbol SBUX. Yesterday, Starbucks presented quarter results and the stock went down roughly 8.5%. Starbucks beat on EPS and revenue, so that wasn't the problem. For the upcoming earnings, analysts are still pretty optimistic, with 13 upvotes and only 7 downvotes. But the problem is still within the outlook. From a dividend point of view, things look pretty decent with dividend yield at 1.85% and the 12 years of dividend increases. But does this mean that Starbucks stock is a buy at current prices? Well, in this video I'm going to show you real quickly what Starbucks does, the most recent earnings report, the fundamental analysis, dividends, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does Starbucks do? Starbucks is the largest coffee chain in the world with more than 36,000 stores worldwide. So first let's check the quarterly results. Starbucks reported 8.7 billion in revenue, of which 73% is coming from North America and 21% is coming from the international segment. The last 6% is coming from channel development. Total revenue was up 14% year over year, which is very nice. EPS is reported at $0.74, up 25% year over year, which is also very nice. Operating margin is up 130 bps year over year and is sitting at 14.3%, which is something that I really like. Last but not least is the global store count, sitting at 36,634, up 6% year over year. This is of course a really easy way to increase the revenue. But the thing that I really liked here within these earnings was the fact that comparable sales were up big time as well. Globally, comparable sales was up 11%, which is really good. North America is sitting at 12% and international is sitting at 7%, which is a little bit lower. If we dive in the specific results a little deeper, we see that North America had a 3% increase in store count and revenue was up 17% year over year. Operating income increased 31%, which is really good, and operating margin increased 200 bps, which is also very nice. The international segment saw a 7% increase in comparable store sales, and store count increased 8%. Revenue increased 9%, but most importantly, operating income increased 74%, and operating margin increased 640 bps. To me, this looks really good. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you lots for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Starbucks is a 120 billion market cap company, which makes them the largest coffee chain company in the world. PE ratio is at 36, which could indicate that they are at a premium price right now. However, keep in mind that Starbucks has some great growth numbers for a company this size, and of course a big moat. Later in this video I will show you my 3 price targets for Starbucks, so make sure to watch them till the end, because PE ratio is only telling a small part of the full story here. Revenue is at 32 billion, and in this graph we see that revenue went up really nice and steady. And of course some problems during the lockdown periods, but nothing to worry about for now. Over a longer period of time margins are going up, but it's not really steady and consistent. Margins have decreased in the past couple of quarters, but yesterday margins increased a lot. However, these earnings results weren't updated yet in this graph of macro trends. EPS is pretty much the same story. It's going up in the long run, but it's not really steady and consistent, even if we left out the lockdown periods. Price to sales ratio is at 4 right now, and over a longer period of time it's going up and the current number does not look good to me. But keep in mind that Starbucks has a moat and is still growing in high numbers. Analysts expect EPS to increase at roughly 20% per year, which is insane. This is something that I really like, of course. And it's pretty much the same story with the revenue expectations. They expect to see a 10 to 12% increase every year, which is really nice. Return on assets is sitting at 14.2%, which is above my 10% minimum. Return on equity doesn't look that great. And the most important number, return on invested capital, is sitting at 64%, which is an insane good number, especially since it's above the 5-year average of 48%. Current ratio is at 0.75, which is really good, so this comforts me a lot of course. And total debt is sitting at 23.8 billion, and I prefer companies that can pay down at least a third of the total debt with the total cash position. Right now total cash is sitting at almost 3 billion, so they can't pay down a big chunk of their total debt, which is something that I don't like of course. So it's very important that free cash flow is growing, since this is used to pay down debt, but also to buy back shares, pay dividends and all other things. And in here we see that free cash flow is going up in the long run, but most recently we see some problems within the free cash flow. Another interesting thing are the shares outstanding. It's going down in the long run. It means when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 1.85%, which is a pretty decent number. Annual payout is at $2.12 and payout ratio is at 68%. I prefer 50% or lower, so right now there's roughly 32% left in cash to buy back shares, pay down debt, acquisitions, research and all other things. To me this payout ratio is too high and is caused by the current free cash flow problems. The 5-year growth rate is at 13%, which is a great number. On top of that, they grew the dividends for 12 years in a row, which is also pretty impressive. Overall, these dividends looks pretty good to me. But is Starbucks stock a buy at current prices? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 10, 11 and 12%, since I think they will increase the revenue at higher numbers versus the historical averages. Next to that, it's also based on the analysis expectations and the current outlook. Profit margin I'm filling in 10, 11.5 and 13%. And for the free cash flow margin I'm filling in 7, 8.5 and 10%. For the PE ratio and the price to free cash flow I'm filling in 20, 22 and 24. It's a big company with great fundamentals and in some areas even a moat. Next to that they are able to grow at high numbers, which is kinda impressive given their size. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now Starbucks stocks is at $104. I hit analyze and we only see one green number. We have a low price target of $49 to $70, which is a big drop from the current stock price. We have a mid price target of $69 to $93 and we have a high price target of $93 to $121. To me, the high price target is the most justified here. And I know this is a scenario with high expectations, but I really feel confident about the future for Starbucks. However, based on this high price target, they are valued at a range of $93 to $121, meaning they are right in the middle of this range. So it would be great if the stock continues to fall down even more. My final conclusion on this stock is that I really like the company. It's one of my bigger investments and with reason. The stock has great fundamentals and great dividends. The valuation is something you could argue about, but I really feel confident about the future, especially with margins increasing, China opening up and hopefully free cash flow will recover as well. For now I'm waiting a little bit longer for the stock price to come down. But an earnings beat like yesterday and an 8 to 10% decrease in stock price is definitely something that I really like. And remember to do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I'd really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and we'll see you in my next video.